You talked to the First Street Foundation, a nonprofit group who quantifies climate risks, and they say many of the areas of the state are underpriced relative to their climate risk. Can you explain what they mean by this?
Yeah, sure. So what First Street did is they modeled what a few different climate risks are across the nation, wildfires, flooding, wind damage. And then using climate models, they said, okay, how many properties are at a very high risk of being damaged by wildfires, flooding, wind, and how many are undercovered by the insurance market? And so they were actually able to calculate a climate insurance bubble. And so in Texas, what they found is a huge number of properties, about 6.9 million, that have a very high climate risk, but are being undercovered by the insurance market. And so that could mean that a very large number of properties in Texas could be at risk for seeing higher rates in the future as insurance companies adjust to this new reality.
So part of your report focuses on the Gulf Coast and the Texas Windstorm Insurance Association. Can you break down the problems facing the association and people who live along the coast?
Yeah, so basically, the Texas Windstorm Insurance Association is what's known as an insurer of last resort. And so it was set up by the Texas legislature in 1971. If you live along the Gulf Coast and no insurance carrier is willing to insure your property because of the really big risk of hurricanes, then they will. And the way they do that is through a mechanism that essentially allows them to tax other insurance companies in the state if they don't have enough in premium revenue to cover the damages. So they did that after Hurricane Harvey, for example. But the reason that that matters for those of us who don't live along the Texas Gulf Coast is that every insurance company has to pay into that if they need it. So that cost can get passed along to consumers all over the state. And so the cost of reinsurance for the Texas Windstorm Insurance Association, which is basically insurance that your insurer buys, that cost is really increasing as climate change gets worse. And I mean, the alternative here is that they could increase rates for those folks who live along the coast, but they would have to raise them a lot to really be financially sound. And that sort of raises a lot of tough questions about whether dramatically increasing those rates along the Gulf Coast is an appropriate solution, because then you run the risk of making it really unaffordable to live and do business there.
Right. Aaron, thank you so much for joining us. Really appreciate your insight.
Yeah, of course. Thank you so much.
All right, Sean and Aaron.